Canadian dividend stocks are actually looking very appealing, and especially for those value-oriented investors or just dividend investors, and also for those who are a little bit concerned about inflation rates right now, because they're basically through the roof. As dividend stocks is pretty much free cash flow that you earn every single month or every single quarter from the stocks you're investing in. This is the best way to actually hedge yourself from inflation or potential market crash. As even that is going to happen, you would be so secure and so safe because of the consistent and free cash flow. You can actually get more drips out of your investments right away, and also you can increase your positions on the current dividend stocks you're investing in. Hello everyone, Alex is here. How you doing? I hope you're doing well. Today we're going to be looking at the best dividend stocks on the market right now, on especially Canadian stock market, that I actually invested into these stocks, both of them, and something you might consider investing into as well, because those provide insane value to your portfolio. And one of the important questions that people keep asking me is when you actually invest in the stocks like that. And there is no great answer. Just don't try to predict the market, because there are two ways that can go. You're lucky and you invest in the right time, so your portfolio grows, you get your dividends back, they increase the dividends the next month and all that, all good. Or you are unlucky, which is pretty much reversed, where the whole thing went down, you buy high, you sell low. That's what's happening most of the time whenever you try to predict the market. So do a dollar cost average investing, invest in the positions every single week, month, every 2 months, whatever you can do with your finances. And that is exactly what I'm doing right now. I keep investing every single week to my portfolio, increase my positions in my current stocks, or I invest into new dividend stocks and get some exposure to other markets as well. My current dividend portfolio averages out around 500 dividends per month. This is crazy. I didn't even think that can happen, but this is happening right now. And I'm super happy about it. I basically reinvest all these stocks automatically with drip, or I invest back the change. And today I'm gonna share two dividend stocks on the market that I think are the best right now, that I invested into basically yesterday, and I'm starting to get returns already. Both of these stocks actually expected to grow by the end of this year already, and actually expected to provide even more market share value next year. And moreover, this type of stock that you invest and forget. This is basically the stocks that you buy and you never ever sell, because they give you consistent free cash flow and they also grow over time, and especially on a long-term period. And the first one today is going to be a super legit stock. It's a blue chip stock, and you probably know about it, but right now is one of the best times to actually invest into it if you don't have it, or increase your positions if you already have it in your portfolio. And it's TC Energy. The ticker symbol is TRP.TO. TC Energy provides a safe and juicy yield of about 5.7%. This is crazy for dividend stocks, and just for a regular, even for a high dividend stock, this is super high. And I like it because it gives you a lot of dividends back, and it's super easy to maintain drip on stock like that. And TC Energy is a large cap infrastructure company that has a 20-year record of providing "let's sleep well this night" dividend growth over the last 20 years. And it has a great 10-year average dividend growth rate of 7.3%, which means basically that they increase their dividends every single year at around 7.3%. This is crazy. Your investment basically grow by 7.3% just out of this dividend increases. And you know what's even more important, that with an inflation rate of 4.7%, and the dividend increase is actually above that, so you're pretty much safe. You're on top of the inflation at this point, which is good. This is what you want to do whenever the inflation hits this high record. Another very interesting point about TC Energy is that in October, they actually skyrocketed from $60 per share to $68 per share. This is actually a pretty big jump for a company like this, but most important thing is that they actually dipped back to $60 per share right now. And that is where you invest on a dip, because it's gonna grow eventually on the long term 100%. This type of the company that grows over time no matter what. And whenever you see a dip of 10-15%, you invest in the companies like this right away. Because the blue chip stock, everyone needs energy basically all the time. So that's why this company is going to survive no matter what. In their last quarter, they report they can actually support the growing dividend going forward as well. They also mentioned that because they had some problems due to COVID with one of their pipelines, they actually might decrease their dividends from 5 to 7% raises to 2 to 5% raises, which is still pretty good for companies like this, but it's not as high as 7% every single year. So keep in mind that, but all in all, this company is actually a pretty good deal. I invested in this company, actually increased my current positions because they dipped like 15%. What should I do? I, of course, buy more of it. From the share price appreciation over the next year, analysts actually project on the high end, the share price is going to be around $88. So that's pretty much around 45 to 50% increase from their current value, which is crazy number. On the lower end, they project they're going to be around $60 to $65. So it's not that big, but it's still higher than what we have today. From the DRIP perspective, if you want to reinvest your dividends automatically, you would need to invest around $4,200 into this stock in order to get this automatic reinvestments. This is totally worth it because you invest and forget, and you get this compounding going forward for you as well, which is great. This is how you actually build wealth from your investments and how you improve your dividend positions going forward as well. So totally check it out, add it to your watch list or invest into it. Depends on your positions and what you are looking for and where you want to diversify your portfolio into. And let's move on. Before we move on to the next one thing I want to ask you is smash the like and subscribe to my channel. Let's go. You've probably predicted the next one, which is one of my favorite dividend stocks and actually the favorite one recently, and it's Algonquin Power Corporation. This is a great stock and they're also dipped like crazy recently, so you gotta invest in this company because you need to use this opportunity to buy more shares of this company so you can get more dividends back and your DRIP is way easier. The ticker symbol for them is AQN.TO. This is a great stock, let's talk about it. They own and operate a portfolio of regulated and non-regulated generation, distribution, and transmission utility assets. And the share price of their stock actually dropped by almost 15% since the beginning of the year. This is crazy. If you look at the regular S&P 500 index like VFE, for example, you would see that it actually gained around 20% just this year alone. This is crazy. But Algonquin Power actually lost around 15%. So it means they're actually not doing well, but they actually do. They increase their dividends every single year by 10%. Over the last 10 years they did so. This is crazy. 10% on your investments, you know, this is crazy number. And they also right now in that value opportunity where you can buy more shares of this stock so you can get more dividends back and your DRIP is going to be way easier as well. As your DRIP for Algonquin Power needs to be around 1900. So what it means is that you need to only invest around 1900 into this stock in order to get one free share of this stock every single quarter, which is going to be automatically added to your portfolio from your dividends. This is great. This is how you build wealth from your dividends. The company also just announced they're going to actually do a large acquisition, utility acquisition in the United States, and they're actually raising some money to actually finance the deal. That's why the stock price is actually dipped slightly. But you know, if a company acquires other company, they probably know what they're doing and they probably improve their business going forward. So mergers and acquisitions approach for companies like this of this size is actually a great deal because if you don't want to build something in-house, you actually acquire some other business that does it very well, and then you incorporate it to your business so you grow together. This is a great deal. I think this company is actually expected to grow by 10, 20, 30% over the next year. And dividends as well. So I invest in this company more because I like Algonquin Power. I invest in them from the last 1 year, and I also increased my position just recently as well. Their current dividend yield is around 4.7 to 5% depending on stock price, And it's great. This is actually a high dividend stock with a proven record of paying dividends and a crazy record of increasing their dividends year over year by 10%. This is great. So these two dividend stocks are actually a great addition to any dividend portfolio. These type of stocks that you invest and forget brings you great cash flow and a peace of mind because you don't need to worry about them going forward at all. Stay safe out there and I'll see you around. All the best. Cheers. Bye.